Silver breaks new record levels. But when you find out what's happening behind the scenes, you will be shocked. The situation truly gets out of control, and the United States is right at the center of it. But what am I even talking about? Well, let me explain. Disclaimer, for the first time in over 200 years, silver has crossed into three-digit territory. Silver just hit $100. If you own physical silver, you know exactly what this moment represents. Years of patience. Years of watching the mainstream media ignore what you could see with your own eyes. Years of being told you were crazy for stacking a barbaric relic while everyone else chased digital promises and paper contracts. But you held strong because you understood something fundamental. This metal has been systematically suppressed for over 2 centuries. You knew that roughly 350 paper contracts exist for every single physical ounce. You recognized that silver is one of the most manipulated assets on planet Earth. And yet, despite all that manipulation, despite all that paper, despite all those lies, the breakthrough was inevitable. Because eventually, physical truth meets paper lies. And when that collision happens, the paper burns. You now get to say something that no generation before you could say. I was there when silver hit 3 digits for the first time in human history. Be proud. You knew what you held. But here's what makes this moment even more explosive than you might realize. The $100 breakthrough is not just about a psychological barrier being shattered. It's a symptom of something far deeper breaking down in the silver market itself. Right now, as I'm recording this, the United States wholesale silver market is experiencing a complete breakdown. And I'm not talking about retail shortages at your local coin shop. I'm talking about the very foundation of the American silver supply chain cracking apart. Users have obtained the wholesale silver trade sheet from one of the U.S. Mint's authorized purchasers, and what it shows is absolutely stunning. Every single physical silver product is sold out. Not back-ordered, not delayed, completely sold out. One of the main wholesalers who purchased directly from the U.S. Mint is literally not accepting orders for a single physical silver product. But here's where it gets really interesting. At the exact same time these wholesalers are completely sold out, multiple physical silver retail products have suddenly gone no bid. That means dealers aren't even willing to quote a purchase price. This isn't a demand problem. This is a capital problem. The largest wholesalers and brokerages in the country are running out of money to operate. Here's what happened. Most wholesale dealers short their entire silver book to stay on net neutral. They make money on spreads, not on the metal itself. But as silver has quadrupled in price, the cost to maintain those short positions through COMEX futures has exploded. These institutions have maxed out their credit lines, financing buybacks, refining costs, and most critically, covering the massive expense of shorting millions of ounces. The irony is delicious. The entire U.S. wholesale precious metals industry is getting devoured by silver itself because they tied their fate to the fiat dollar instead of owning the actual metal. Silver at $100 is now too expensive for them to maintain normal operations. Forget the bullion banks for a moment. Silver is breaking the wholesale market itself. The infrastructure that's supposed to deliver physical metal to investors is collapsing under its own weight. And this wholesale breakdown is just the beginning. Because what's happening in the options market right now suggests this price discovery is about to get significantly more violent. When the silver options market prices a sudden vertical repricing, it's not forecasting momentum, it's warning of an air pocket move. This is caused by absence of liquidity. Price jumps across multiple levels with little trading in between. Stops get skipped entirely. Volume expands after the move, not before. This is how structurally constrained markets adjust, not smoothly, but suddenly. The current option structure suggests this risk window is concentrated into the coming weeks, with March emerging as the critical resolution period. We're not looking at normal price discovery. We're looking at a market preparing to gap higher because there simply is not enough physical metal to satisfy the paper promises that have been made. The wholesale breakdown in the options market are telling us the same story. The physical silver market is running out of metal at precisely the moment when geopolitical forces are about to make that shortage exponentially worse. Because while American wholesalers are maxing out credit lines and options are flashing red warnings, something far more significant is happening on the global stage. Something that connects Venezuela, Greenland, Canada, and China in a way most people haven't yet understood. President Trump is allegedly preparing to do something that hasn't been done in over 40 years. Acquire a new United States strategic silver reserve. Follow the timeline. Last November, the Trump administration added copper and silver to the U.S. critical minerals list. Then on December 8th, the G7 finance ministers held a call discussing export controls on critical minerals right before China enacted export controls on silver beginning January 1st, 2026. China fired the first shot. Trump is preparing to fire back. And when he does, the implications for the silver market cannot be overstated. Here's what most modern traders don't even know. The United States government held a strategic stockpile of physical silver for over 100 years. The U.S. Strategic Silver Reserve began in the 1800s and exceeded 3 billion ounces at its peak in 1942. I read that again slowly. 3 billion ounces. That's roughly 4 times the total current inventory in the LBMA. That's 7 times the total COMEX inventory. It represented a recognition that silver wasn't just money, it was a strategic national security asset. By the 1980s, that reserve had declined to 165 million ounces. Then, in 1981, the Reagan administration liquidated the remainder, selling approximately 1 million ounces per week, to drive down prices after the Hunt brothers had pushed silver to $49. By 2002, the U.S. Silver Reserve was completely depleted. 0 ounces remained. And not coincidentally, silver bottomed around $4 and began a secular bull market that's now resulted in the first ever 3-digit silver price. Silver has risen over 2,000% since the strategic reserve was depleted. The moment the U.S. government stopped dumping 1 million ounces per week, silver took off. Now here's where this becomes critical for every silver investor. We are entering a phase where the U.S. government is recognizing they made a catastrophic strategic error. And President Trump, who understands leverage and strategic assets better than perhaps any modern president, is positioning to rebuild it. But there's a massive problem that makes this incredibly bullish for silver holders. Most silver comes as a byproduct from gold, copper, lead, and zinc mines. Total U.S. annual silver production is only about 35 million ounces. Even with that production, the U.S. still imported 64% of its silver consumption in 2024. So here's the math. If the federal government wanted to rebuild even a modest strategic reserve of 100 million ounces, they'd have to nationalize every single ounce of U.S. silver production for 3 years. To reach 1 billion ounces, a fraction of the historical 3 billion ounce peak, would require 30 years of total domestic production. 30 years is an unacceptable timeline when you're engaged in a financial world war with China. Time is of the essence. Not only must the U.S. acquire the silver, it must beat China to it. So if Trump can't build a reserve through domestic production, the only option is the open market. And here's where the numbers become mind-blowing. Total LBMA silver inventories, 790 million ounces. Total COMEX inventories, 422 million ounces. Total China vaults, just 35 million ounces, down 15 million in recent months. A 1 billion ounce U.S. strategic silver reserve would require sucking up every last ounce in the LBMA, SGE, and SHFE combined. It's not even mathematically possible to do quickly without sending prices exponentially higher. Even the attempt would send seismic shockwaves through the market. And this doesn't even account for China's response. The moment Trump announces any move to rebuild a strategic reserve, China will immediately scramble to obtain every available ounce. We're talking about 2 superpowers competing for a finite physical resource that's already in a structural supply deficit. This is financial World War III, and silver is one of the main battlegrounds. China's U.S. Treasury holdings just dropped to an 18-year low, now about $680 billion, while gold reserves have surged to record levels near 74 million ounces. This is a global reset. They've added silver to their list of tightly controlled exports, restricting the flow of this critical metal at precisely the moment industrial demand is exploding. President Trump recognized the attack and is fighting back. His tariffs targeted China. The dragon is fighting back with every financial weapon at its disposal. China's export controls on silver led to Trump's quick response on November 6th, adding 10 minerals, including silver, to the U.S. critical minerals list. But it won't end there. Export restrictions from the U.S. are likely next. And export restrictions would be the equivalent of a nuclear detonation on the London bullion market, which is already experiencing severe issues sourcing physical silver. We got a taste of this when Trump briefly announced 10% tariffs on the UK. Silver immediately spiked $5. Trump's recent moves suddenly make sense through this lens. Venezuela has significant mineral resources. Greenland sits on enormous rare earth and mineral deposits. Canada and Mexico are key to North American supply chain security. Trump isn't just thinking about territory. He's thinking about the raw materials necessary to win a financial war. The Trump administration is already moving on infrastructure. On January 5th, the Department of Defense announced plans with J.P. Morgan to build a $7.4 billion state-of-the-art smelting facility in Tennessee to boost U.S. access to critical minerals, including silver. That's not a small investment. That's a signal the government understands the strategic importance of domestic refining capacity. And it's not just adversaries making moves. Germany is being asked to bring back more than $100 billion in gold from the United States because trust in Washington is falling. Our allies are questioning whether their gold stored in America is actually safe. They want physical repatriation. They want their metal in their own vaults under their own control. This is a trust crisis in the global financial system. reinforcing why physical assets, particularly gold and silver, are becoming the preferred store of value over paper promises. So where does silver go from here? Let's talk realistic price targets based on mathematical relationships that have held for decades. The gold to silver ratio has been one of the most reliable indicators. In 1998, the ratio bottomed at 41. In 2011, it bottomed at 32. By connecting these levels, we can project a target around 22. Run the simulation. If gold reaches $6,000 and the ratio hits 22, that puts silver at $272. Gold at $7,000 with a ratio of 22 means silver at $318. Gold at $8,000 means silver at $363. These aren't wild speculations. These are mathematical probabilities based on historical mean reversion. A silver price of $250 to $300 is not aggressive. It's a high likelihood mathematical probability. And remember, that's just based on the gold-silver ratio normalizing. That doesn't account for what happens if Trump actually tries to acquire a strategic reserve. That doesn't account for China's response. That does not account for the ongoing structural supply deficit that the Silver Institute pegs at 17% annually. Silver lease rates have been signaling severe tightness. They exploded past 35% in October and have remained elevated around 8 to 9% in London. Those elevated rates tell you the shorts are desperate to find physical metal, paying massive costs just to borrow silver to fulfill obligations. Combine all these factors, the wholesale market breakdown, the options market warning of an air pocket move, the geopolitical competition between the US and China for strategic reserves, the structural supply deficit, elevated lease rates, the trust crisis in the global financial system, and a gold-silver ratio that's still historically wide despite silver hitting $100. What you get is a perfect storm for silver investors. Every single fundamental driver is pointing in the same direction. Higher prices, potentially much higher, and potentially very soon. This is why the $100 breakthrough is so significant. It's not just a psychological level. It's confirmation that all these structural forces are overwhelming the paper manipulation that's kept silver suppressed for over 2 centuries. It's confirmation that 350 paper contracts per ounce can't hold back physical reality forever. For silver investors who have been stacking through the years, who bought at $15, at $20, at $30, who held through the drawdowns and the manipulation and the mainstream media mockery, this is your moment. This is validation that your thesis was correct. Physical assets win, real money wins, patience wins. But understand that we are still in the early stages of this financial World War III between China and the US. The Trump administration is just beginning to respond to China's moves. The strategic reserve discussion is likely just entering serious policy consideration. Export restrictions haven't been implemented yet. The real supply crunch hasn't even fully materialized. You're witnessing history in real time. You're watching the global financial system restructure itself around physical assets instead of paper promises. You're seeing the early stages of what could be the most significant commodity bull market of our lifetimes. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed this video, then turn on the notifications bell on this channel. Missing an important silver update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.